Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. Now, the S&P today traded in a quiet 50-point range, finished down about 10-15 ticks, 10-15 points. The NASDAQ did finish green. We had Fed Chair Powell overall just continuing to keep the same line of thinking. He did emphasize, though, that Congress should not back away. They should continue to support individuals and small businesses. And the S&P stocks lifted up a bit after those comments. But that strength did dissipate. And to the close, you're seeing the White House make some comments on trade, sanctions on China for the treating of Ungar Muslims. A lot of that kind of working into just some geopolitical narratives that ultimately the market isn't really paying too much of attention to. China and India battling at the border. North Korea being a little bit aggressive against South Korea. You also have the trade narratives out there behind the sanctions too, between the U.S. and China. The EU talking about sanctions, and then China and Australia. So there's a lot out there right now, but the market is focused on the Fed's liquidity. And that, for instance, what we heard today, Fed Chair Powell mentioned Congress keeping that Kool-Aid there, and overall that lifted stocks for the time being. Still, his comments yesterday have resonated that when the economy stabilizes, you're going to see the bond purchases pull back. Now that's a given, but it seems to have resonated a little bit this week and keeping rallies contained. Obviously, a lot of resistance overhead. We'll get into the technicals here in a moment. I'll keep it a bit quicker here today. Run through the charts. The NASDAQ did finish positive. You can see here in the heat map, it was Google, Amazon, Microsoft, all moving green. Netflix, Nvidia up sharply. All of that keeping the all that keeping up the NASDAQ higher on the day. Still, NASDAQ struggled against technical resistance. Major three-star resistance, 10.035, 10.075. The high of the NASDAQ today, 10.047. But then you go banks and energies, those are lower. One of the reasons why the S&P could not track it. But again, a quiet 50-point range here in the S&P, consolidating today. Overhead resistance 31.75. That's the settlement from Wednesday's session. And then we also have major three-star support at 30.75. So 30.75, this area here was tested, held intraday yesterday. 31.75, big resistance overhead there. In the S&P, you get a close outside of either of those, you're probably going to get a directional move. Now, let's take a look at crude oil. So the energy stocks were all down. Production today on the EIA estimated numbers down 600,000 barrels per day. That's a big drop, and overall that helped keep the market some solid footing. Overall, though, too, you had the EIA data, the inventory data. Crude, a bigger build than analysts expected, but not as big as API. Cushing, big draw, but not as big as API. Numbers somewhat neutral. You saw a draw in gasoline. Overall, you're seeing just crude oil just consolidating. The equity markets are consolidating. There's obviously some fears that the virus is reemerging. Is that going to do something to demand, especially in China? Obviously, U.S. and China trade comments not helping crude oil. So a consolidation day, but above 36 bucks, you really 35.5, $36. Bulls are the driver's seat for now, and we've had a very cautiously bullish bias in crude oil just over the last couple of days, given that. So we don't have a ton of conviction up here. If anything, we want to be selling sharp rallies. We just think this thing is a little exhausted, but overall, again, the bulls are in the driver's seat, 36 bucks or so above there. That's they're going to try and really cover this gap. I mean, you've got to see this gap right here as a high probability of being covered while it's above $36. Now, I want to make sure, again, mention gold here. Gold, another tail. You had the tail Monday, big tail today, somewhat of a tail yesterday. Now, if you cut these tails out, which we don't want to really always do, but you cut these tails out, you got this little bit of a bull flag developing, and that's a bullish. I mean, that really is. So the lines are drawn here in gold, and you really need to get out above this area here, but it's also got to get out above here. So we have major three-star resistance at 17.37, 17.43, a wide range, and that seems to be sticky. It cannot close out above there, and even if it does, it's not in the clear. But gold seems to be holding ground in a very constructive manner. Continue to think that dips are buying opportunities, and I do think we're going to see one more high here before it tops out August, September time, when the U.S. economy starts showing sharp improvements from what we had in March and April. Silver, though, needs to be that tailwind. Silver has the 50-day moving average coming up, creeping up on the 200-day, needs to provide that tailwind breakout above 19 bucks. Talked about that yesterday. Very important. Now, take a look at the currencies. You got the euro down again today. It's showing signs of exhaustion. Where do we expect the euro to go? I mean, at a minimum, you got the 200-day moving average down here, 50% retracement, 110.5. If it holds 111.40, that would be a very constructive pullback for the bulls. We think it should go lower, but you got to see what the charts are telling you. 11.40 holds there, very constructive pullback for the bulls. Lastly, let's touch on the Aussie dollar. You got employment data coming out of Australia tonight. You got retail sales coming out of Australia tomorrow night. You got the 200-day moving average. You got a breakout area still right around 67. That's the support. Got to get a break below 67. And you know what? You even really have this sort of uptrend line here. So clearly the bulls are in the driver's seat with the Aussie. It is showing some signs of exhaustion. We need to see a break below here. We do think it should, but it's not about what we think. It's about what the market's telling us. So with that, I'll leave you. Give us a call. We're here to help. 312-278-0500. Remember, though, futures trading involves substantial risk of loss and is not suitable for all investors.